We don't know what's going to happen out there geopolitically or health-wise. Do we think the world is going to be a more stable place or a less stable place? They're probably going to disrupt the oil shipping routes, and, we're probably going to get a spike in oil, and, it's just going to wreak havoc on the world.
You're doing retirement planning based on the outcome of a foreign government's election.
I have no control whatsoever what the federal government's going to do. It's something that we really can't control. I was checking my portfolio online quite a bit, and I used to hate it when I'd log on and see a dip. And it's like, damn it, it's down again. And there was a lot of periods, Neil, and I've got a slide here coming up that shows that sideways movement right before I started this. And it's a very disconcerting feeling. Like, I'm 61. You don't want to see things like that happening at this age. It's a sinking feeling.
Well, you know what? Let's rip the Band-Aid off here, Stan, and let's pull back the curtain, and you tell me what we're looking at here.
Okay. So this is a slide of my investment portfolio that my wife and I had. So I contribute into my own RRSP and a spousal RRSP. And this data goes back to 2016, and that's all I could get, unfortunately, because prior to that, it was with a different firm and they merged with another one. So that's as far back as it goes. So you can see here, it's getting a little bit of growth up into 2017. And then the market started to kind of go down a little bit. And I think, personally, my thoughts are some of the federal government policies that we had kind of has a little to do with that, but I won't make this into a political discussion. So.
We can always speculate, can't we, Stan?
Yeah. So you can see here, dip number one, from the peak over here down to about here, that was a $135,000 drop. Okay. That's hard to make up because now I've broken the compounding effect from back here. Now I'm starting here. So I have to have a lot of growth to make up for that. So we're flat from that period on to here. Well, that was the pandemic. That slide before showed you, I don't know when something like that's going to happen again. So another dip here. That dip was of about $91,000 in my RSP. So we can see some recovery here. That's when the government started flooding, the economy with money and dollars. So there was a lot of spending going on. We get up to the peak here. And after that, a central bank and everyone figures out, we've put too much money into the system. We got to tighten things up. Inflation was running out of control. Now you've got this dip in the market. So there's another $130,000 drop. Got lucky. 2024 was a really good year. And, I started at the same time as you did, Neil, with Ascendant, and that's where I really started to understand what infinite banking was and how to properly design a policy, and I just had to wait for a little bit of recovery. So right here, at this point, was right before the federal election in the US. And I remember having this conversation with my financial advisor. I said, I want to pull my equities out. I want to put them into like a cash account, a high-performing cash savings account. And he looked at me and goes, why do you want to do that? It's crazy. I said, well, I don't know what's going to happen, but whatever happens down in the U.S. is going to affect us up here. We're tied at the hip. I thought, well, if Harris gets elected, I don't have a lot of good hopes for the economy. It's going to kind of be more of the same. But then I thought Trump might be better for the economy, but you never know. Nobody forecasted that tariff war coming. I never saw that coming either. And that's had a really bad effect on us up here and down there, in my opinion. So this drop here, that was my first withdrawal out of my RSP to start following the policy.
And you can see that the gray line down below that corresponds with that, right? As a withdrawal.
Yes, that was a withdrawal. So, we backdated the policy. So I got to put in 2 years worth of premium. So I withdrew about $160,000 out of my RSP that time.
Okay, so you want to keep the wealth in the family. I get it. I hear you. Me too. That's why we wrote this book, Don't Spread the Wealth. Everyone tells you that you want to spread the money, spread the wealth around. No. You don't want to do that. You want to keep the money in the family with the people you love and care about where it belongs for as many generations as possible. That's what we talk about in this book. In this book, we have an incredible 15-page bonus you can download, which instructs you on how to start the conversation with your family on annual family banking meetings, how to host them, some sample exercises, and a sample agenda. Tons of amazing, great benefits. Go ahead, get a copy right now. Head on over to Don't Spread Wealth. That's don'tspreadwealth.com. Don'tspreadwealth.com. You're going to love it.
And you know what, Stan, just for whatever it's worth, I'm just looking at the graph here. And, one of the things that I'm sort of seeing here, if we start up here, this kind of feels, dare I say, maybe it's a little bit here, kind of feels like you were in a bit of a box here for a number of years, right?
I was.
And I shouldn't be laughing. I mean, this is terrible, right? That's not how you want to live your retirement, right?
No, it wasn't. And it was always very frustrating to see things like this. And, like I said, when I was younger, Neil, it didn't really bother me. And, and in the industry I was in, it was like that. A lot of the companies I worked for were publicly traded. So you're always trying to get that stock up. And it was like a roller coaster, with commodity prices up and down. And, one day your stock options are worth a lot and the next day they're worth nothing. So, I've always been heavily tied into that market. And quite frankly, in through here, Neil, this period, I got tired of it.
Yeah. I mean, you're doing retirement planning based on the outcome of a foreign government's election.
Yes.
I mean, I don't know about you, but I haven't seen that on any spreadsheet of stock returns ever, and the sleepless nights that carries with it, right?
No.
So,
no. And same thing here, Neil. I have no control whatsoever what the federal government's going to do. Look at now. What do they want to spend? $500 billion with no budget? Like, can you guys believe that? Like, everyone in the chat, like, what do you guys think about that? There's going to be more money flooding the market. Like, what's going to happen? Inflation again? Like, it's something that we really can't control.
Well, I remember, Stan, in this period here, right?
Mm-hmm.
I mean, it was like must-see TV with the next interest rate announcement. Are they going to cut? Are they going to put it higher? What's happening with interest rates? And then the market would gyrate, right? So at some point, though, here, Stan, you shifted gears.
Yes.
Right? And that didn't start with, reallocating resources here or there. I'm assuming it started between your ears.
Oh, it did, Neil. It's when I first, like I mentioned before, when I first heard about infinite banking, I just vividly remember how mad I felt that I didn't know about this before, that there was a better way of doing things. And it's like you say here, rethink your thinking on retirement. I knew there was a better way, but I wasn't quite sure how to do it until, I got into Ascendant and I really got a strong grasp of this.
Well, and that's Nelson's fifth golden rule is rethink your thinking, right? So we've pulled back the curtain on your conventional plan. Now let's pull back the curtain on what you're doing now and the solution that you've put in place for your family. And before I pull that back, just give me the 3 or 4 top things you were hoping to achieve with this plan, Stan.
For us, it was the safety and the safety, security, and guarantee that I didn't have to worry about volatility. Like, maybe go back to that slide for a sec, Neil, the building on it. We don't know what's going to happen out there geopolitically or health-wise. I mean, I think you had this before, Neil. Like, do we think the world is going to be a more stable place or a less stable place? I ask everyone, type in the chat, M for more stable or L for less stable.
Let's see what we got coming up here. Got a whole bunch of L's here, Stan.
Yeah.
Big L.
Yeah.
Yeah.
I mean, exactly. You just don't know what's going to happen.
Triple L. Yeah.
Yeah. Like, right
absolutely.
now, I'm a bit of a political junkie and, I've been watching very closely what's going on in the States. And, what if Trump decides to go drop that MOP on that reactor in Iran? What's going to happen? Well, they're probably going to disrupt, the oil shipping routes, and, we're probably going to get a spike in oil, and, it's just going to wreak havoc on the world. And, it's out of our control, but it's going to affect the markets, and if you have your savings tied up in there, you're at the mercy of that. And for me, very disconcerting.
Hey, if you like this video, go ahead, watch more right here. Or if you want to watch the full conversation, the full podcast episode, go ahead, click right here.